Okay, good morning, everyone. And thanks for joining us on a Saturday morning. I'd like to welcome you to this webinar on All Points North. It's a rural EB-5 project that holds significant promise for the future of health and rehabilitation in the United States, and for those seeking to achieve permanent residence through the EB-5 Investor Program. Our goal today is to give you an overview on the project and the market it operates in, and a good look into the project and how it's progressing and why we believe this is a high quality EB-5 project. My name's Carl van der Merwe and I'm the sales director at EB-5 Coast, and I'll be moderating today's discussion. I'm very pleased to be hosting this session today with Noah Nordheimer, the CEO of All Points North, and Steve Smith, the founder and president of EB-5 Coast to Coast. We're also joined by Jeremy Zacharias, the executive vice president of All Points North. Just a couple of housekeeping items. There's a Q&A button at the end, on your link. Feel free to enter questions there and we'll address them during the conversation or at the end of the call of the discussion. We're recording this as well, as you can see, and we'll share that with everyone after the webinar. Since we're part of a well-regulated industry, I just want to take a minute to read a quick disclaimer. This marketing presentation and event do not constitute an offer to sell securities. If you're interested in seeing project investment documents, we ask that you contact EB-5 Coast to Coast directly so that we can confirm you're an accredited investor or the equivalent in your market. This presentation also does not constitute legal immigration advice. If you would like legal advice, you need to form a contractual relationship with a licensed immigration attorney. EB-5 Coast to Coast works with a number of the industry's best attorneys and will be happy to make a referral if desired. So for our existing investors, this webinar is an opportunity to hear firsthand about the progress of All Points North, including construction plans and operational developments. We understand the importance of staying informed, and we're here to provide you with an update on the latest information. And for those that are considering this EB-5 investment, we're excited to introduce you to the project. It's located in a rural TEA. All Points North is a leading behavioral health company outside near Vail, Colorado, where their flagship is located. And the project has already achieved significant milestones, including the 956F approval, several I-526E approvals, the latest of which have come in about 4 months. And we believe it provides a compelling opportunity for future investors. Noah, it's a pleasure to have you with us today. Thanks for taking the time. I thought we could just kick off before we dive into the project by sharing a little bit of your background in behavioral health and your prior experience working with EB-5.
Sure. Appreciate you taking the time as well. I've been working in behavioral health for about a decade and a half now. All Points North is the second company that I've founded in the behavioral health space. The first company that I founded, we sold to private equity about 5 years ago, company named Concerted Care Group, which got merged with a company by the name of Colmac. Very successful, development of that project. And we actually utilized EB-5 capital to grow that platform from its original location to 5 additional locations. So I'm very familiar with using EB-5. It was a successful project by all accounts for all investors, including EB-5 investors.
Thanks. So can you just tell us a little bit about the vision behind All Points North, why you founded the company, what are your growth plans for the platform going forward?
Yeah, APN, or All Points North, which I'll refer to as APN here, in our website is apn.com for anyone that wants to go see who we are and what we do. The idea behind it was building something more comprehensive that supported our clients long term. I think a lot of our clients' journey starts with residential care, which is at our main campus in Colorado. The average person comes to us for 45 to 60 days, and then they continue on with outpatient services, either in our satellite facilities or on our telehealth platform. I think we've always been chasing outcomes. We've been operational for the past 5 years. We've been in the top 5% of the Acorn collaboration, which is the largest data set of independently tracked, not-for-profit that tracks performance and outcomes within behavioral health. We're benchmarked against over 3,000 facilities, and for the past 3 years, we've been in the top 5% of that for our client improvement scores. When you look at the severity adjusted improvement scores, they're more than double that of highly effective providers. Our readmission rates are a fraction of industry mean. We built this to improve behavioral health is the bottom line and do it the right way. And we're utilizing a lot of innovative technology and modalities in conjunction with that. Things like deep TMS, hyperbaric oxygen therapy, ketamine-assisted therapy. This is our Plus division, which is really interventional psychiatry and neurotechnology, which is where the market is moving. So many of our clients have suffered with depression or anxiety. They've been taking, various different SSRIs and SNRIs for years and still feel depression. So I think the industry is moving in a different direction now. We're utilizing a lot of different modalities, and I think APN is really at the forefront of that.
Thanks. Could you just talk a little bit about the demand for behavioral health, particularly in your market? It's very much the high-end sort of market that you're focused on.
Yeah.
What's driving that?
Yeah, I think there's a number of things. One, APN is unique. We have a professionals program that is built around executives, professionals, high-income earners who have different stressors, different challenges in their lives, in their careers, in their home life. And we've built a program that supports them. The upper end of the market, I think there is nothing that really compares to APN in terms of the clinical and medical platform that we've built. But there's overwhelming demand in the US for behavioral health across all income bands. Colorado in particular is heavily underserved. If you actually look at almost all of the major managed care organizations or insurance companies, none of them are meeting network adequacy in our region. We are one of very few providers in the western slope of Colorado. So we have a big moat that we've really built around us, and we're seeing overwhelming demand continuously year over year.
So you'd say it's a pretty resilient industry. It's, does it follow economic cycles or not as much?
I would say that it doesn't. We've actually seen an increase in demand for services during downturns in the economy. I think there's opportunities for people to seek help when there's less going on in the world, or they may be out of a job for a period of time. I think that people are learning to focus on themselves. We have a very specific populations, I'll say, that we serve. We have programs for professionals, which I mentioned. There's also healthcare professionals. We're one of maybe 5 facilities in the country that is approved to treat physicians and nurses. So we get referrals directly from them. And we've seen, especially during COVID, a pretty big uptick in healthcare professionals seeking help.
Thanks. Can you briefly just mention there's some recent legislation in Colorado that could open up a new market for you? What is that about?
Well, yeah, it will open up a new market for us. So Oregon was the first state in the US that allowed plant-based medicine. They started that process several years ago. Colorado is the second, which is issuing licenses. We are in the licensure process, which will allow APN to utilize plant-based medicine, things like psilocybin, DMT, ibogaine, et cetera. And we're really excited for that. The research really supports utilizing plant-based medicine. There's been tons of studies done, and we've been tracking it with our medical board. And we're really excited for that. We've been utilizing ketamine-assisted therapy over the past 5 years and become very I'll say, experienced with psychedelics through ketamine-assisted therapy, and we're excited for what's coming next.
I've read recently that the administration has signaled potential cuts to addiction mental health subsidies. Is that something that could impact you?
No, we are a cash pay and commercial insurance-based business. So any of those cuts to subsidies would not impact APN. And actually, this past week, in terms of those subsidies being cut, they actually reversed course. So they had cut several $billions of funding, which did not impact APN. But just to clarify, they actually reversed that within several hours and are still issuing those subsidies.
Okay, okay. So before we sort of turn to the lodge, the existing lodge, and chat a little bit about that, it's part of the broader group. Could you just give us a perspective of what the overall group looks
Yeah,
like?
sure. So the company started with the lodge, which is adjacent to this project. This project is an expansion of that. And we've grown to follow our clients back to their home markets. So we've developed satellite facility in Boulder, a detox and assessment center, an outpatient center in Denver, and then another facility that has all levels of care in Dallas, just outside of Fort Worth. So, as well as our telehealth platform, which covers, I believe, close to 40 something markets today, in telehealth. So that is the organization. What I would say is, 80% of the revenue today does generate from that main campus or the lodge. And we see that really as a starting point for so many of our clients where they come in, they stay with us for a month to 2 months, and then they continue on into a satellite facility or in telehealth. So, continuing to expand this campus is our number one priority.
So I see Jeremy's showing some images of the
Yeah,
existing
Jeremy's
lodge.
showing
Yeah.
a video of the existing lodge here, and we have a lot of the details around phase two, which I think is a new, improved look. We love the lodge in its current state. This was a renovation, so phase two is actually really exciting for us because with a renovation, you're kind of stuck within the original footprint of the building. And here we get to design everything based on everything that we've learned over the past 5 years. And that's what we've done.
Could you talk a little bit about the occupancy levels and the operational performance of the lodge?
Yeah, we operate generally between, 85 and 95% occupancy at the lodge. We have had months where we've operated with a wait list.
Yes.
Ultimately, there is pent-up demand, and we are in the process of negotiating several contracts that would carry over into phase two and increase the overall demand.
So phase two, is that going to essentially just be a replication in terms of the services you offer and or adding to the existing services, or are there going to be additional service lines, or is there any sort of meaningful difference between the two?
Yeah, it's really an expansion of the existing operations today, as well as adding plant-based medicine within our new license. But it's adding 85 beds to what is currently a 77-bed campus, so it's more than doubling our capacity. Jeremy's showing you some of the renderings here. The lighter colored rooftop is the existing lodge, and then to the right of it, you can see the black colored rooftop is the EB-5 project.
Could you just give us a sense of the timeline here, Noah, in terms of construction has started.
Yeah,
What is Yeah.
Yeah, we started doing site work here in the fall. We ran into winter here in Colorado, so it's extremely costly to continue construction through the winter. And we are finishing up our construction drawings as we speak, and we hope to submit for building permit to go vertical with construction here in the summer. Jeremy is showing you the interior designs. We've gotten down to finish level selections. So we have really selected almost all of the components and finishes of the interior of the lodge. We've been repricing everything. I think that we've come in about 5% under where our original budget was. So that's the good news. I think we were conservative in our approach and our modeling. But we're really excited for what this project is going to end up looking like. These renderings are very, very specific to the finishes, and the building will look and feel almost identical to what you're seeing here.
Okay. Just on the construction permit, is that all that remains from a permitting perspective, or is anything in addition you still need?
Correct. No, we just need our building permit to go vertical with construction.
Okay. So just sort of turning to the project more specifically, it's a $124 million expansion project, and it's funded $72 million by EB-5, $40 million construction loan, and $12.5 million from sponsor equity. The equity is largely in place. Could you just talk a little bit about the senior loan? What is the status there and the timing on that?
Yeah, we have multiple term sheets and offers. We're negotiating with several regional banks that are local and have CRA demand in this region. We expect that we'll make a selection of which lender we're going with over the next couple months here and lock that in. But again, the debt is such a small component. We were extremely conservative in the way that we approached this, where it was a lot heavier with equity than it was with debt. So getting the debt for this project is not something that's a challenge. And I'll say all of our models were extremely conservative in the interest rate environment. We're definitely going to pick up a couple of points on the interest rate because the market has improved since we did the original modeling.
Okay, this may be turning to some of the financials or the projected financials. Could you give us a sense of revenue for the existing lodge last year and what you're sort of projecting for phase two?
Yeah, the main lodge is approaching 50 million in revenue. And with phase two, we actually have modeled that to be conservatively about in line with what phase one does. We've used a little bit lower rates just to build in a buffer, but we are extremely bullish on what this finished product will allow us to actually increase rates to. So we've underwritten it about 20% below our existing rates. And it works and works well. We are confident we can actually achieve something far more significant than what we're modeling.
Okay. And just in terms of the overall group as well, because it does impact EB-5 investors ultimately, what is the overall sort of debt for All Points North? How much debt have you taken? I know that the company has obviously largely been funded by private equity, and we'll get onto that in a second.
Yeah, I think we've invested about 120 or so million dollars of equity into the company. We have at this point less than $25 million of debt. So we are not a leveraged company. We've always been conservative in our approach, and we'd prefer to do things a little bit more conservatively to be safe and secure and build this for the long term.
Okay. Now that's obviously prior to the construction loan coming in, which is projected to be around 40 million.
Correct.
Okay. So just to touch on that a little bit more, you've raised more than $100 million of equity from pretty sophisticated investors, private equity investors.
Yeah.
Could you talk a little bit about what's driving their conviction in All Points North?
I think there's a lot of interest in behavioral health. There's not a ton of highly professionalized teams out there. We have recruited over the past 5 years really the best of the best in our industry. These are people that share this vision that we can do things better. I think by and large, it's that team that's driving the outcomes that we're generating. All of them also have equity in this company. So all of our key employees are building for an exit alongside of our investors. There's not a disalignment, which you sometimes see in organizations where the employees don't have ownership. In this organization, our employees do have ownership, and all of us are building for that eventual exit.
Can you talk a little bit more about that? Who would the likely buyers be, and what sort of timeline have you got internally? What are you thinking?
Yeah, for us, I think sometime over the next 4 years is a very realistic horizon. Private equity is extremely active in behavioral health. There's a lot of consolidation through managed care organizations acquiring operators like ourselves. So I think that there's a host of options for APN. APN is the best in brand and in the industry. What I will say is a week does not go by that we don't get contacted by someone who has interest in purchasing APN. But we want to, continue to build and do what we're doing and maximize value for all of our investors, including EB-5 investors.
Just from an EB-5 perspective, there is an exit in 2030. If there's no sale on the horizon by 2030, how do you anticipate repaying the EB-5 capital?
Certainly there's multiple options there through cash flow, or we obviously could take on more debt. We have the ability to leverage up and take more debt on to buy out EB-5 investors if that was, what we wanted to do there.
Thank you. Thanks, Noah. Well, I'll turn to Steve now, if I may, and I think no, we may come back with a couple of questions, but Steve, thanks for joining us.
Thanks for hosting.
Steve is the president, founder of EB-5 Coast to Coast. Maybe Steve, just briefly, just give us your background in EB-5.
Sure, you bet. I've been a real estate developer for 35 years. I've been in the EB-5 space for 14 years now. I started, raising EB-5 for one of my projects and slowly transitioned into EB-5 financing. And we have national coverage with our regional centers. We're now sponsoring dozens of investors with, dozens of projects with over 1,000 investors. And that gives us a unique overview of the entire market and gives us the ability to pick and choose which projects we want to work on raising capital directly for the project. Sometimes we sponsor projects. We help other developers raise capital for their projects. We pick and choose the very best for projects that we want to raise capital for, and this is one of them.
Excellent. And so what specifically is your role, or EB-5 Coast to Coast role in this project?
Sure, I'm the NCE manager, and I oversee the regional center function, which is supervising compliance and protecting investor interests under the operating documents. I should also mention that LCR Capital is a co-manager in the deal alongside us.
Steve, we obviously get a lot of questions on this, as you know, but this is a preferred equity investment. Could you just chat a little bit about why, when this deal was structured, why you went down that route? Why preferred equity?
Sure.
And not a loan, which is the typical model, obviously, for most projects.
Equity investors typically get a higher return on investment, and that allows us to offer an above market return on investment to our EB-5 investors. And we are protected from the downside in terms of being repaid ahead of management and common equity and preferred equity. And so this is what we consider a more balanced approach. It's still we feel a very safe investment, but giving us the ability to offer a higher return on investment to the investors.
Could you
Our
just
investors.
comment on how many investors we have to date and yeah, how many we're looking for? We're looking for 90 investors, right? The total of
Yes, exactly.
72 million EB-5.
Yes, and very, very happy to report we're over the hump. We're at about 50 today, so we're over the halfway mark, and we're on track to complete the raise around June or July, based on our current momentum.
And how much of the EB-5 capital has been deployed to date?
Approximately 12 million. And that's keep in mind that funds are only available for deployment once a receipt notice is received from USCIS. And some investors have also funded with only a partial investment, and then they fund the balance later in typically 6 months or less.
Okay. And could you just comment on the job creation here? As
Yeah, happy to report we have roughly a 50% job cushion. In other words, for the 90 investors, not the requirement is 10 jobs per investor. That's 900 jobs, but we are projected to create about 1,350 jobs. So roughly 15 jobs per investor. And with 800 jobs coming from construction spending and the balance from operations.
okay. And Steve, would you mind just going through the exit mechanism here? It's structured as a put option. If you wouldn't mind just going through
Yeah, you
your
bet.
very,
Yes.
high level.
Yeah. So we have a unique option here for the investors, and that is the option to exit in 2029. And that could be extended for a year to 2030, or if they stay in, they have the option to earn an extra $250,000.
If the company is sold.
Yeah, if the company is sold. Thank you.
Yeah.
That's right.
Right.
That's right.
Yeah.
When the company is sold. And if it's yes, exactly.
And so just to be clear, that's the investor. That option is available to the investor. It's not the NCE that makes
That's right.
that choice. Okay.
That's right. Each investor can choose whether they want to exit in 2029, maybe extended to 2030, or stay in for an extra $250,000 and waiting until there's a sale of the company.
Okay. I mean that is I do believe that's a very compelling feature because that option is valuable and there's probably a way you could value that, but it's yeah it does make this I think a pretty unique EB-5 project in that sense.
I'm not aware of any other project on the market with that potential. Most projects pay a very very tiny amount, something less than 1%. And we're offering, a good healthy, return every year, and then this option to make an extra 250K. I'm not aware of any other project on the market that's offering that.
How is the 250K calculated, and what protections are there to ensure that investors get the full allocation?
Sure. It's based on a sale of the project, and we are, there's multiple assets of APN, and when a sale is contemplated, there will be a breakdown of, or I should say, an allocation of the sales price to each of the assets of APN. And we have the right to obtain an appraisal for our investment, which is the phase two lodge. And if we don't agree as to the valuation and the allocation of the sales price on Phase 2 Lodge, we have the ability to, number one, order an appraisal, and number two, to institute arbitration if we can't agree with management as to the valuation of Phase 2.
Thanks, Steve. How would you answer this, to an investor that wants to know what sort of protections are there for me as an investor, as a pref equity investor in this Phase 2 expansion?
Sure. As a real estate developer, I always look at, what's the completed value of the project once it's complete. We have an appraisal that says that the valuation of the lodge that we're funding will be $150 million when it's stabilized. And with only $40 million in senior debt, that implies equity of $110 million. And we're in first position with our $72 million of EB-5 investment. So I think we're in a good spot, good position.
Okay, well, thank you, Steve. I see we just got a couple of questions that came in. I think we have touched on some of them, but there's one here, Noah. Do you have any specific companies you think that could buy APN? I don't know if you want to get too specific on that. You basically did mention there's a lot of potential buyers that knocking on your door.
Yeah, I mean, I wouldn't go to, I guess, mentioning specific companies here, but there are large private equity firms that we have relationships with. We're banked by JP Morgan Chase. We constantly stay in touch with them. The market is very active. Behavioral health is insulated. There's not a lot of good product in this space. And there's not a lot of scaled product either. So ultimately, APN checks both of those boxes. So there's just pent-up demand across the board. When you think about, the typical buyers, there's a handful of large players in the space. Getting granular and saying any one of them specifically today would be, a little too soon.
Okay. I mean, another question here for what is the, can you just talk a little bit about the ramp up of Phase 2? How many, how do you model that in terms of patients and
Yeah, we don't show inside the first 18 months, we don't show getting above really 50% occupancy. And then from there, we kind of show like a 2.5-year ramp up. So we're pretty conservative in our approach in terms of how we model this. Our expectations are with all the infrastructure in place, right? Our marketing team, our contact center, all of the resources, contracts, and things that are available from the existing lodge, the ramp up for Phase 2 could and should be significantly faster than what we are modeling. We modeled this based on what it took us to launch the lodge originally. We have a lot more in place now than we did then. So I think all of our expectations are we should be able to beat that. However, we're always planning for a worst case scenario, and things that are unforeseen and making sure that, we stand the test of time. So that's what a typical kind of ramp up looks like here is call it 2.5 years to stabilization.
Okay. There are a couple of technical questions here that I might not be able to answer live. I apologize. I will get to them all after the webinar, and we'll get your answers. But I mean, there's a couple of questions here again on construction timeline, Noah. Could you just sort of, I know you touched on it, but could you just give us the likely timing here in terms of
Yeah, we expect to break ground and go vertical here, call it June, July of this summer. It'll be a 20-month build, and ramp up begins from there.
Okay. And that factors in some delays over the winter.
Correct. I mean, based on our start time there, we should be able to get under roof and then build from the interior throughout the winter, next winter. So that doesn't, we've already been impacted here based on the size and scale of this project. We knew that at least one winter would impact our schedule, and it was this winter.
Okay. A question here on bridge financing. If I mean, I'm very confident we'll get all of our EB-5 investors, but if there's a shortfall, what is the contingency?
Various options. I think, one is raise additional equity, two is raise additional debt. We have very low leverage debt modeled for this project. We have the ability to raise, more debt if that's what we had to do. But based on the volume of inquiries and correspondence with your guys' team, I don't see that being an issue.
Yeah, I mean, I think, again, I apologize for not getting to all of these questions because some of them are a little technical. I mean, are all the therapy practices in compliance with state and federal regulations?
Yes, we are. So we are licensed by the state of Colorado. We are also dually accredited. Not many facilities in the country are dually accredited by CARF and ASAM, as well as the Joint Commission. We have the Joint Commission's gold seal of approval. We got the highest ranking that you can get from that accreditation body, which is a 3-year accreditation. We do things the right way. We have compliance teams in place. Ultimately, we have helped the state during COVID to create protocols for safety.
Thank you. And the sort of local community in outside Edwards, Colorado, that where the facility is, do you have the support from them for this expansion?
Yeah, I think overall, one, we don't need the support of anyone locally. We've been vested here. With tons of legal challenges originally. This is vested all the way up to the Colorado Supreme Court in terms of our ability to use the property for this. But yes, we have great relationships within the community. And I think overwhelming support. Behavioral health is really lacking in Western Colorado. And there's an overwhelming amount of need. And not just in Western Colorado, I actually would say if you look at Denver and the amount of facilities in the Denver metropolitan area, Colorado is one of the most underserved states in the country. And that's why about 40% of our clients are actually originating from Colorado. And then the balance of those are coming from across the country because, they've deemed that APN is their best option for treatment.
Okay. Just one question here. How long has it taken to get EB-5 investors approved? We're up to 12 approvals now in this project, and the most recent ones came in 4 months. I think three of the recent ones came in about 4 months, which is very encouraging. And then I guess there's also a question here on the sustainment period. If the business is sold, will investors, how do you treat investors that may not have reached their sustainment period? First of all, I mean, Steve, I don't know if you want to answer that, maybe.
You bet. Well, there's absolute protection for the investors in the PPM to maintain their sustainment period, which is a minimum of 2 years. And so, in any case, if there's an investor, investor who invests very late, for example, there's a legal obligation by APN to keep their funds invested for at least 2 years.
Yeah.
So, we have absolutely accounted for that scenario where, somebody might need to remain invested for 2 years. And so APN's prepared even if there is a buyer, the buyer would be an obligation of the buyer to maintain that investor's investment for that minimum 2-year period.
Yeah, maintaining that sustainment period is high on our, obviously, on our priority and responsibility list. We're going to make sure that every single EB-5 investor gets what they are due and gets things done compliantly.
Another question for you, Steve. It came up. Is this project in the national interest, or something like that?
Good question. Absolutely. It qualifies as a national interest project. So what happened therefore is that the approval for the project, that is the form I-956F, was expedited, and it was approved in about 7 weeks. And so it fits that requirement.
Does that benefit the investors in any way?
Well, technically not. I mean, so it's not a reason for USCIS to expedite the investors' petitions, the I-526E. But, I think it is helping us in terms of only a 4-month approval process. That's a very, very fast approval process for a 526E.
Yeah. I've heard this an opinion from an attorney that it is a good fallback if there ever is a delay in your processing. You could still argue that you've invested in a national interest project, which they have recognized. So I think, though the policy doesn't seem to be to favor investors, I think that is still, I think one could keep that in your back pocket, because some attorneys are prepared to use that as a very strong argument.
Sure. And so far, we haven't had to.
We haven't had to, absolutely.
Yeah.
I don't know, gents, if you've scanned any questions there that we can answer on the webinar now. But I think I'm not good at multitasking. I've done my best here to try and answer some of them. And we will get back to you on all the other questions that I may not have addressed. I apologize, but I think I think this has been very helpful. Thank you, Steve. Thanks, Noah. Thanks, Jeremy. And it's obviously been recorded. We'll share this with everyone, and we'll respond to all the questions as well. Make sure we answer those. I'll leave it at that. Enjoy the rest of the weekend. Thank you, everyone.
Thank you, guys.
Thanks, everyone.
Bye.
Thank you. Bye-bye.